What if a vital energy lifeline is severed right when an economic storm brews? Today's tenuous balance between geopolitical tensions and market crises could tip any moment. Let's dive into a dramatic showdown in California, where one of the major oil giants has openly defied Governor Gavin Newsom. This is more than just a middle finger to local politics. It's a peek into the underbelly of California's dependence on its oil reserves. With Newsom's aggressive push toward renewable energy and reduced carbon emissions, traditional oil companies are feeling the heat. However, instead of retreating, one major company decided to lay its cards on the table, illustrating how critical its operations are to the California economy. This move raises significant questions about energy security and the stability of market prices against a backdrop of political friction. Layered onto this, we have the failure of US-Iran talks, setting the stage for increased volatility in risk assets. For those tracking these discussions closely, the lack of progress is a significant blow. The geopolitical chess game continues to influence global economic stability. With the current deadlock, investors are on edge, watching closely how risk assets like currencies and stocks respond. These talks were a beacon of hope amidst a turbulent landscape, and their current failure adds to the uncertainty hanging over markets today. Then there's the human interest story making waves beyond just financial implications. A man driving to Chicago to sell a Corvette in cash, only to face an unexpected turn of events. It reminds us how personal decisions can sometimes intertwine with broader economic conditions. The average person is left wondering how safe it is to conduct significant financial transactions in today's environment, where risk and unpredictability seem ever present. Moving to our everyday experiences, have you noticed the growing trend of beaded glassware in eateries? Beyond their aesthetic appeal, this trend signals economic behaviors worth examining. The question is not just why these items are trendy, but what their popularity tells us about consumer confidence and spending patterns. It's a subtle yet powerful indicator of how the dining industry is adapting to current economic strains, shaping the way market analysts assess consumer preferences. And in broader economic news, the global outlook dims as policymakers confront the costly implications of the Iran conflict. The ripple effect of geopolitical tensions is increasingly evident in the way nations budget and prioritize spending. With wars dragging on, the impact on supply chains, energy prices, and overall economic growth becomes a pressing concern for investors worldwide. Breaking down today's market prices, it's a promising scene in the crypto world, with Bitcoin rallying at $73,380.99, up 3.72%, and Ethereum at $2,267.10, up 3.42%. These upticks hint at a growing investor appetite for decentralized assets amidst global uncertainty. As traditional markets grapple with geopolitical pressures, cryptos could be emerging as a favored alternative for risk-tolerant investors looking for hedges. The S&P 500 is also on an upward trajectory, showing a slight but significant increase of 1.0%, and Nvidia, reflecting broader tech sector resilience, is climbing at 189.24, a 0.33% rise. Meanwhile, the United States Oil Fund, USO, mirrors energy market tensions, jumping 2.28.47. JP Morgan commands attention too, with a 1.2% rise to 359 cents, reinforcing the financial sector. But before we look closer at these asset movements, consider this. What unfolds if the US-Iran talks unravel further and tension escalates? This unresolved geopolitical conflict could spell trouble for already fragile risk assets, potentially leading to increased market instability. Prepare for potentially turbulent sessions as we watch how savvy investors might be recalibrating their strategies in real time. Bringing it all together, the juxtaposition of California's energy standoff and global geopolitical strains forms a complex puzzle for market watchers. One might ask, what does a combination of disrupted oil supplies and failed diplomatic talks do to market psychology? The growing convergence of energy and political risk highlights an urgent need for developing diversified investment portfolios. As we analyze these events, it becomes clear that managing investment risk requires a strategic approach that leverages both traditional markets and innovative financial solutions like cryptocurrency. A diverse portfolio not only provides a hedge against specific market downturns, but also maximizes capitalization on emerging trends. Look no further than tech and crypto for long-term growth potential in a climate defined by short-term uncertainties. In conclusion, as markets grapple with today's twin narratives of geopolitical tension and regional economic standoffs, it's a call to action for every investor to stay informed, agile, and adaptable. Those who navigate these shifting tides wisely might not only preserve their wealth, but potentially enhance it. Keep tracking these stories closely, and don't miss our next deep dive, where we'll continue to break down essential financial news and market movements critical to your portfolio's performance. Speaking of adaptability, it's crucial to understand that successful investing is not just about reacting to market changes, but anticipating them. This means keeping an eye on emerging technologies, consumer behavior shifts, and new regulatory frameworks that can alter the investment landscape. Investors who can foresee how these variables will play out stand to gain significantly more than those who are caught off guard by sudden changes. Let's take a moment to consider the role of artificial intelligence, AI, in this evolving financial ecosystem. AI and machine learning technologies are not only revolutionizing industries, they're redefining the criteria for successful investment strategies. Companies that are integrating AI into their operations are not just modernizing, they are positioning themselves as leaders in innovation. As an investor, recognizing the companies that are leveraging AI to optimize their business models can provide a competitive edge. Furthermore, sustainable investing continues to gain traction as more individuals and institutions prioritize environmental, social, and governance (ESG) factors. With climate change challenges and a global push towards sustainability, green technology and renewable energy sectors are attracting substantial investment. Companies that align their strategies with ESG principles often demonstrate resilience in market volatility and are increasingly seen as safer, long-term investments. Keeping an eye on these sectors can yield promising returns while also contributing positively to society and the environment. On another front, let's not overlook the transformative potential of blockchain technology beyond cryptocurrencies. We're witnessing its gradual yet profound adoption across various industries, like supply chain management, healthcare, and real estate. Blockchain's ability to provide transparency, security, and efficiency in transactions is opening up new avenues for investment. Investors can benefit by understanding which sectors are ripe for disruption and which companies are leading. Finally, don't underestimate the power of networking and information exchange. In today's connected world, collaborating with other investors, attending workshops, and participating in online forums can provide valuable insights and opportunities that might not be visible through news headlines alone. The investment community thrives on shared knowledge, and being an active participant can enhance your understanding and decision-making capabilities. As we move forward, remember that the key to thriving in a volatile market environment is a robust strategy that balances caution with calculated risk. Stay curious, stay informed, and stay proactive. We'll be here every step of the way, sharing insights, tools, and tips to help you make informed investment decisions. Join us for our next session, where we continue to uncover the forces shaping our financial future.